If I look at the results for FY25, particularly from a personal banking point of view, a few issues really stand out. The first one is if we look at the true test of what it looks like to build and scale a transactional franchise, we're seeing more and more customers join African Bank. And that's really underpinned by the repositioning of the brand, a greater focus on frontline transformation, and we are seeing customers that are in the youth segments joining African Bank really at the back of our new proposition for career starters. The second big and notable achievement for personal banking is really the significant growth in the transactional volume. If you look across the group, we are now up to about 51 billion of transactions processed across the MyWorld platform, but we continue to grow that base both in terms of new customers and funded base. Of course, as a bank that is about inclusion, not every customer that banks with us is going to be salaried, but we continue to improve our salaried ratio throughout our base. So that's one pleasing thing, really, about 17% growth in transactional volume that's coming through and underpinning the growth in NIR for the bank. The second big thing for me is really if I think about the essence of trust as a banking institution, we're seeing more customers and communities entrusting us as the bank where they place their most precious savings. So there's a growth in lazy deposits, but actually the biggest growth that we are seeing is coming from the investment base. And that's driven by individuals that are preferring African Bank as their main bank, and secondly, communities that are using our Stokvel proposition to come and bank with African Bank. And we think that the acquisition of both the capabilities and the businesses that we acquired in the form of Ubank are adding to this momentum for us. From a lending point of view, it's really a mixed bag, because if we look at lending over the past year, though we have continued to help our customers, we've really slowed down growth in unsecured lending at a time when, in fact, the market was growing in real terms. So we've done two things there. We have, one, selectively readjusted our risk appetite and our ability to selectively originate risk within our risk appetite. But what we've also done is we've focused in the back end of our business through restructures, better collections effectiveness, and we've taken the year under review 2025 to clean up all the old tail, typically stage 3 of our balance sheet. And you'll see that reflects within the key matrix of NPLs and, of course, through our coverage ratios. We've enhanced our funeral offering by building a funeral proposition that now talks to the family beyond just individual and or the nucleic family. And that we believe will continue, particularly for the markets that we serve, to stand us in a good state, to drive our scaling, to drive our transformation, and to remain relevant for the segments that we say we serve. So if you look broadly, we are building solutions for the bottom end of the market, but as we grow, we want to grow with our customers by going through into the middle and, of course, support the efforts within business banking where we bank decision makers and owners of businesses that are in business and commercial banking. On the alliance side, we set ourselves as a bank, a go-to bank for anyone amongst the fintech players that is looking to, one, provide solutions, particularly for underserved markets. And we now are proud bankers to at least 3 of South Africa's biggest alliance partners. That, combined together with the internal growth of new customers, has set us up above 6 million customers that transact on the African Bank platform. We are pleased with that progress, and we continue to, one, focus on solving for customer pain points, build better customer journeys, remove friction, and make it easy for customers to do business with African Bank. If I look ahead really at what the biggest key focus is going to be for us going into 2026, is that at the back of all of these achievements, we need to focus on regaining our strength in unsecured lending, backing our customers in hard times, getting better at restructures, and finally, building a fuller service offering, particularly in the lending space, by exploring our secured lending offering, our housing solutions. Those we believe really will move the dial. And if you look through the shape of our earnings, this would probably be the last mile to, one, extract efficiencies, and two, diversify within personal banking our balance sheet structure.